Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 20th of February 2021 and we're publishing our gold and silver weekly update for the week ending the 19th of February. We also briefly look at political events and economic reports which could shape what happens to both the United States dollar and therefore precious metal prices. So let's take a look. Firstly, just a quick shout out to two important videos produced in the past few days. What recent US economic data means for gold and silver prices, and gold's start to the year is the worst since 1991. And we've placed links to both of these below. Now, back to last week's figures. Gold fell $40 last week from $1,824 to $1,784, having hit a high of $1,827 and a low of $1,761, a fall of 2.2% for the week. For those interested in such things, its weekly high and weekly low is lower than that of the previous weeks. In sterling terms, gold finished the week at £1,273. That's down £44. And in euros, it closed at €1,472. That's down €33 on the week. Silver fell 10 cents, falling from $27.38 to $27.28, having hit a high of $27.96, not quite reaching 28, and a low of $26.45, a fall of 0.4%. In sterling terms, silver closed at £19.48. That's down 29 pence. And in euros, it closed at 22.52 euros. That's down 0.08 euros. The gold to silver ratio fell from 66.6 to 1 to 65.4 to 1. Bitcoin rose just over $8,300 last week, and its price currently stands at $55,466, though it has touched $56,000. The Dow Jones on Friday closed at 31,494 points, up 1 point on the day and up 36 points on the week. The S&P 500 closed at 3,906, down 7 points on the day and down 28 points on the week. And the Nasdaq Composite closed at 13,874, up 9 points on the day and down 221 points on the week. Brent crude closed at $62.91, up 48 cents, having actually fallen more than $1 yesterday, so that rise would have been much higher had yesterday not occurred. And WTI crude closed at $59.24. That's down 23 cents on the week, but again following a fall of over $1 yesterday. The dollar index stands at 90.36. That's down 0.12 on the week. Now our conclusion for price trading range last week stated, quote, gold we still see as consolidating and therefore forecast a regular price range of $1,750 to $1,850, with $1,700 to $1,900 being outliers. Until key support or resistance levels are broken, we still envisage a relatively tight trading band. Our trading range for silver still remains $26.50 to $28, with $25 to $29 being outliers. There will be a breakout at some point, potentially in either direction, though to be fair, the odds are more to the upside than the downside at the moment. End quote. Well, apart from two short blips in the early part of last week, gold primarily traded lower, with a slight but weak recovery on Friday. The difference between highs and lows were just $66, and we can see that the 1750 support level has held so far, but so has the 1850 resistance level. Although the US dollar index moved lower, long-term US Treasury yields moved higher in anticipation of upcoming inflation, therefore exerting downward pressure on gold. That said, Janet Yellen, the new economic secretary, stated yesterday that the US economy would need additional stimulus to get the economy on the right track, and the $1.9 trillion stimulus package could get the US back to full employment within 12 months. We're a little skeptical of that, but that's her claim. There are some key support and resistance points we need to be aware of in relation to short-term trading of gold. Obviously, those who stack it, it has little relevance, as we're looking more medium to long term. Now, the first are November's lows of $1,764, and then June's low of $1,667 lying underneath. Of course, we have what we call the psychological round figures of 1750 and 1700, which in our view play very often a more important part than many of the technical purists would like to admit. Resistance is seen at the 10-day moving average of $1,811, and again the round figure of 1850 is important, lying above it. Short and medium-term momentum have turned negative, but the fast stochastic is suggesting an oversold level and that an upward correction may be forthcoming. Silver, on the other hand, opened the week strongly and peaked on Monday at $27.96, not quite able to hit its $28 target. Then it fell back and, like gold, reached its lowest level on Friday and then staged a modest recovery. Its trading band between high and low was a modest $1.51, but it certainly seems the case that although there was much downward pressure to break it below $27, its resilience keeps on raising it back above that level. The conventional trading wisdom is that silver will hold almost permanently now above $24, close to the 200-day EMA, and needs to break above $28 in order to resume its path to $30. The precise technicals, though, suggests that if silver manages to settle above $27.50, it will quickly move to the next resistance level, which is located at $27.75, and a move above this level will open the way to the test of $28.30 resistance, providing, as we mentioned earlier, it clears the psychological $28 barrier. Now, in videos produced earlier in the week, we covered economic data results with considerable emphasis placed on a much higher than anticipated retail sales figure for January, coming in at 5.3%, compared with minus 1% in December and against expectations of a positive 1.2%. To some extent, this took the market by surprise. Initial jobless claims, though, were disappointing, having risen from 848,000 to 861,000 for the week. And so too were the market manufacturing flash PMIs reported yesterday, coming in at 58.5 for February. And that's compared with 59.2 in January and against expectations of 59. That said, in contrast, the market services flash PMI was a little higher than January and higher than expectations at 58.9. Now, looking forward to next week's US economic data, we have the following being announced. Monday, we have the leading economic indicators for January. Tuesday, Consumer Confidence Index for February. And also we have Jerome Powell's testimony to Congress, which is a monthly event and lasts over 2 days. On Wednesday, we have new home sales for January and again the second day of Jerome Powell's testimony. And on Thursday, we have the weekly jobless claims reports, as always, GDP revision for quarter 4, which originally was aimed at 4%, durable goods orders for January, core capital goods orders, and also pending home sales, both for January. Now, on Friday, we have personal income, plus consumer spending, plus core inflation, plus trading goods advance reports, all for January. So Thursday and Friday are the 2 days to watch, and a little look at Jerome Powell's testimony on Tuesday and Wednesday is worth, if you have the time of course, listening to in case anything slips out. So where does this leave us for gold and silver prices next week? Well, strictly speaking, we should see slightly higher prices, especially as we're getting nearer to the proposed Biden stimulus package being announced. That said, though, even if it is announced, it will, and announced in full, it will take a little time to filter through the economy. And certainly then, industrial precious metals like silver, platinum and palladium will benefit. Gold, technically, is due a rise because of the oversold level, but sentiment for gold is leaving it short term simply because of higher yields and the expectation that inflationary pressures will keep bond yields maintaining their relatively elevated levels. That said, it is only a matter of time before the dollar will feel the squeeze. It's already fallen quite heavily against sterling this past week, and that will act as a tailwind for precious metal prices moving forward. So this coming week, it's boring, we admit, but we see gold trading between 1750 and 1850 as we have for a little while, with 1700 and 1900 being outliers. Silver is a little trickier, as we may start to see some movement greater than the $1 to $2 differential between highs and lows, and so we're widening the gap just ever so slightly. So we see trading between 2650 and 2850, with 25 and 29 remaining the outlier limits. Now tomorrow we should be publishing episode 12 of Bitcoin versus Gold and Silver. So if you follow Bitcoin, don't miss it. And as we stated the past few weeks, we were expecting rises in its price, and each time this has occurred. And in the 3 months since the series began, we've seen Bitcoin treble in value from $18,000 to its current $55,000. Anyway, please do share any thoughts you may have on this, and if you haven't already done so, do subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And please do keep safe this weekend, have an enjoyable weekend, and as always, a most prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.